Despite a historic stock market rally earlier this week, financial markets appear to be reacting cautiously to President Donald Trump's proposed tax cuts, raising questions about the sustainability of economic momentum and investor sentiment moving forward. Earlier this week, the Dow Jones Industrial Average surged nearly 3.000 points, an extraordinary gain that marked one of the most significant single-day rallies in recent memory. However, analysts and traders caution that such rallies are rarely sustained, especially without firm policy implementation or widespread investor confidence. It's unrealistic to expect markets to continue growing endlessly, said Brian Brenberg, co-host of the Big Money Show on Fox Business. Traders know stocks don't grow to the sky. Weak enthusiasm for Trump's tax cuts. A key point of concern among market participants is the perceived lack of enthusiasm surrounding President Trump's latest tax proposal. While the bill promises significant tax cuts aimed at stimulating corporate growth and individual investment, the market has not responded with the kind of bullish reaction many anticipated. Jerry Willis, Fox Business correspondent, noted that despite positive economic indicators, including a month-over-month decline in inflation, the market still seemed hesitant. 0.1% drop in inflation is a solid figure. But investors didn't bite, she said. This subdued reaction suggests that while the economic fundamentals remain strong, investors may already have priced in expectations of the tax bill's passage. You don't get as much juice from something you already assume is going to happen, said Brenberg. Legislative progress brings hope. Nevertheless, there has been meaningful legislative movement. The House recently passed the budget resolution, clearing a crucial procedural hurdle for the tax cuts to proceed via reconciliation in the Senate. That process allows for a simple majority, circumventing the usual 60-vote requirement and virtually guaranteeing passage if Republican unity holds. This is bullish for growth and for corporate profits, the lifeblood of the stock market, Brenberg emphasized. He added that the alignment of strong employment numbers, falling oil prices, and legislative progress creates a robust backdrop for sustained economic expansion. Despite market volatility in the short term, the bigger picture, U.S. versus China. A broader context to these developments is the ongoing economic rivalry between the United States and China. Trump's economic strategy, which includes not only tax reform but also aggressive tariffs, appears designed to isolate China while strengthening U.S. alliances globally. According to Fox analysts, this approach has created new opportunities for American partnerships with countries like Vietnam, Australia, Japan, and members of the European Union. The United States and its allies now represent over 50% of the global market, compared to China's 13%. China is losing ground, both economically and politically, said one analyst. Xi Jinping is running the country like an emperor, not a communist leader, and that's backfiring. Trump has made it clear that he is willing to extend the current 90-day pause in tariffs if it helps solidify new trade deals. That flexibility, coupled with a clear strategic focus on China, has reassured many investors that the broader trade war is being managed carefully. We're the big winners here, Brenberg said. China's the big loser. The risk of misjudging momentum. Despite this optimism, some commentators warned that failing to pass the tax bill by year-end could have serious consequences. It's not just a missed opportunity, one panelist said. It would effectively amount to a $4.5 trillion tax hike. This possibility is not lost on the markets. While investors may have already assumed the bill would pass, any delay or failure could significantly erode confidence. That's why some experts believe the administration should be more aggressive in communicating both the urgency and the benefits of the tax proposal. Still, Brenberg believes the markets understand Trump's style and are confident in his ability to push the legislation through. He muscled it down, he said, referring to recent political maneuvers. That's just how he operates. Global ramifications of Trump's trade strategy. As Trump continues to restructure U.S. trade relationships, the ripple effects are being felt worldwide. Many believe that as China loses access to American markets, it will attempt to redirect its excess supply, especially in sectors like electric vehicles, to Europe. China is dumping cheap EVs on the European market, said Willis, and companies like Mercedes-Benz are not happy. This has led to a thaw in U.S.-European trade tensions, with many EU nations now seeking to play nice with the United States in hopes of avoiding a flood of cheap Chinese imports. There's a reason Europe is cooperating, Brenberg said. They see what's coming. The Trump administration's comprehensive economic agenda, which includes tax reform, deregulation, and trade restructuring, is reminiscent of the Reagan era, where U.S. policy success prompted other nations to follow suit. When Reagan cut taxes, G7 nations looked at our growth and started doing the same. Brenberg noted, "We could see a similar dynamic unfold now. Strengthening regional alliances. The broader geopolitical strategy appears to be working. Asian nations such as Vietnam, India, and Australia are increasingly aligning with the U.S., not only economically but also diplomatically. Most of China's neighbors don't like them," said Brenberg. "This gives the U.S. a strategic advantage. There is growing speculation that if the United States maintains its trajectory of strong growth and strategic diplomacy, other countries, including the EU, might begin loosening their own economic policies to keep pace. We may finally see an end to the European sclerosis," Brenberg added, referring to long-standing structural stagnation in EU economies. Conclusion: a cautious market, an optimistic outlook. In summary, while the market's immediate reaction to Trump's tax bill has been tepid, the broader economic picture remains encouraging. Strong employment numbers, falling inflation, and a strategic realignment of global trade relationships all suggest that the U.S. economy is poised for sustained growth. "There's a lot of noise in the short term," said Willis, "but if you look at the fundamentals and where things are headed, it's hard not to be optimistic." Investors, however, would do well to remain cautious. The market has shown that even historic rallies can be fleeting, especially in a climate filled with political uncertainty and global realignment. But with strategic tax reform, favorable trade deals, and a weakening rival in China, the United States may be laying the groundwork for a new era of economic dominance. Whether the markets fully reflect that yet is another question, but one that may be answered in the coming months.